Hi guys, we're back. Roy Cousins here, weekly market analytics. We're gonna have a beautiful session today, really interesting stuff. I should mention that I'm partnering up here with Light Forex Broker to give you this high quality stuff, high quality trading material. And a couple of words about Light Forex Broker. If you're looking for a trusted broker, a reliable, credible broker, unfortunately, there are not too many of them these days. Light Forex Broker is definitely one of the good ones. And believe you me, I'm doing my own research. And I would not sit here if that was not the case, right? So if you haven't opened an account already, right, following us, following our leads, our positions, we're doing 2 sessions a week here, you're basically wasting time and money. Now, get on board and let's go ahead and explore what I got ready for you today. Alright guys, so I'm following up on a session that was done about a month ago. Actually, it was on the 18th of December. And it was about Wall Street. I think the title was escalating, Wall Street is downside trend is escalating, something in that nature. You can go ahead and check that out. 18th of December 2018, just a month ago. And I wanted to follow up on the situation here because it's remarkably fascinating, right? I mean, this is actually the second follow-up. We started when price was actually right here on the upper section of my symmetric setup here, right? And I was talking about a strong downside move because we saw that price was starting to trade sideways. It actually started trading sideways at the beginning of 2018, at the end of 2017. And when I talk about Wall Street, you know, I talk mostly about the Dow Jones and the S&P 500, right? These two indexes, as far as I'm concerned, are the best representatives of not only Wall Street, by the way, but the whole world stock market, right? You know, all markets are heavily impacted by these two indices. So we were looking at the situation as it was that we had a very strong upside trend, the grand trend, right? That started roughly at the beginning of 2009. And it went up until the end of 2017. It was just one-way shot, just one-way move, very strongly to the upside. But around the beginning of 2018, we saw price beginning, at first we thought it was just, you know, a typical downside correction. Later on, we figured out that it's actually a sideways correction, right? Pretty massive, right? Pretty wide range, but it is a sideways move rather than a downside move, right? And obviously we got, I was convinced with that when price began to form the third leg, because we had the first 2 legs, and then and the second leg that, by the way, took the previous high, right, the tip of the first leg, and began to turn around, right, began to reverse in its way. It broke a very important support level. That support level that got broken, 25,855. That was pretty much the moment that I became very much interested on the downside with regards to the Dow Jones and the S&P 500, which, by the way, presents very similar picture. We're going to look at the S&P 500 as well. Very similar technical pictures. And that was pretty much the moment that I knew that we're going to have a third downside leg in this structure, right? Trading range, right? Sideways movement. So I began to establish a bearish position on the Dow Jones, and if you check out, you know, these sessions, maybe you already saw them, you remember them. I was talking mostly about 2 very important key levels, right? The mid-low key level at 23,957, which, by the way, was a massive profit-taking spot for me on the way down. And I also mentioned the last line of resort, if you remember. The 22262, I actually joked about that it's a strange number and it's easy to remember, right? And I specifically said that I believe that it's more probable that price will reverse at some point in this in this bottom section here, especially if it's going to touch base on that last line of resort. But as long as it's going to react to that and begin to turn around, I expect the next upside leg to formulate, and it could take a few months, right? But having that knowledge, having that high probability of an upside reversal was very, very important. Now, from the technical point of view, it's pretty clear, right? It's pretty straightforward. We see the structure, we see the setup, we see the key levels. But from the fundamental point of view, let's talk a little bit about the fundamentals here, because what happened was that on the way down, price actually broke below that last line of resort temporarily, right? We saw that right on the daily chart. You can actually see it right here, right? And this was pretty much, so what happened here was basically there was that government shutdown, right? We had that battle going on between the Democrats and the Republicans, and I'm talking about obviously the United States government. So there was this imminent threat for a government shutdown. I think that's the reason the market got a little bit panicked, right, at some point, and it began to overshoot itself to the downside. Let's take a look at the S&P 500, right, with regard to the same very period of time, right? As you can see, pretty similar technical picture, very similar trading range, and here there was the overshooting to the downside was even more profound, because on the Dow Jones we saw just a daily close below the last line of resort, the last line of support. Here there was actually a weekly close below that same level, right? The same matching level. In this case, it's the 2448. So right here, I think what happened was the market was getting a little bit panicked because of that, government shutdown that everybody was talking about in the media. But a couple of days later, when the sky did not fail, right? The world did not end, because it was just a partial government shutdown. In fact, the most important departments were already funded, 75%, right? And I'm talking about like the education system, the health system, the military. They were all funded. So there was really no reason for panic. Actually, there was no reason at all for any type of fear over this very partial and insignificant, government shutdown. And when the market began to digest that, we had that swift turnaround, right? So there was a violation here on the S&P 500 from the weekly perspective, which is pretty rare. But we have to remember that this is a weekly setup, meaning if we really want to filter out excess noise, we have to jump into the higher time frame. In this case, it would have to be the monthly. Now take a look at this. This is completely filtered, right? Take a look at this spike here. That was the violation that we saw on the weekly perspective. So price basically gave us a stunning turnaround, really came back from the dead. I have to admit, at some point I was actually beginning to think that there's going to be a breakdown, a genuine breakdown. I was standing on the sideline waiting to see, how things will resolve. And I was pretty impressed, to say the least, with that comeback. So we're seeing this, spike here on the monthly. This is the S&P 500. Let's take a look at the Dow Jones with respect to that same monthly, technical picture. Take a look. Much more mild, right? The overshooting to the downside here was more, is more limited, no doubt. And I actually, my position right now is on the Dow Jones. Usually I go with the Dow Jones. So I flipped over, right? I did exactly what I suggested in the previous session. That if we're going to have that, visible, right, reaction and turnaround on that 22262, I'm simply going to flip over and, engage with a bullish position on the Dow Jones. So I did exactly that. Now let's go inside a little bit and analyze the situation from up close, because I think what happened here last Friday was very important. Now, obviously we saw that remarkable touchdown here on the 22262 with that spike here, and price began to turn around. That was lovely. However, I knew that I was going to aim at two key levels. The first is going to be the mid-low key level as a secondary target. We're talking about the level of 23,957. So I took out some of the profit that I've already made here, and my plan was to decrease the position at that point, because that may actually be a strong, resistance, an obstacle, can send price into a downside technical correction. So it was very important to see how price will react when it reached that level. And if we're going to have a clean-cut break, then I'm going to go right back into re-increasing the position again, because then it is more likely that we will continue on the way up and hit the next major key level, the mid-high key level, 25855. So that's pretty much what I'm doing right now, right? But I want to show you what I think was a very important event, which took place last Friday, right? We're talking about a weekly chart here. Take a look at the close we had here. Let me close up. Take a look at the close we had here last Friday, right? The close was 23,977. Now the key level is 23,957, right? 20 points. 20 points, that's very tight, no doubt. But it is decisive enough, right? That was a 20-point close above that key level. Now, take a look at something quite interesting, quite strange, maybe even. Take a look what happened this week, right? I'm talking about the opening price right now. Take a look at the opening price. 23, right? 936. 23,936. 20 points below that key level. So what I'm trying to say here is we had a gap. It's hard to see it from this perspective, but we actually had a gap, right? A downside gap right across that key level. How interesting is that, right? Price closed 20 points above, but it opened 20 points below. But as you can see, it already covered the distance. It already covered that gap, and it it's looking pretty strongly on the upside, looking pretty bullish, leaving a spike. I mean, it definitely left a spike. It was trying to, it was going on the downside, trying to challenge that very level that got broken. But as you can see right now, it's bouncing back up, because what's important, what's really important, is not the opening, it's the close, right? The close is the close of the bar. In this case, it's the weekly session. It's a very profound session, almost the most important session. And the weekly close is a very significant equilibrium, if you will, between the buyers and the sellers. So it has a huge significance. So the close is more important than the opening. The close was above 23,957 here, which is our main point of reference at this point. And this is very good news. Very good news for all of you who are following me here and have a bullish position just like I do. And I also should say this. Take a look at the S&P 500 with regard to that same movement, right? Same movement. Take a look. It did not reach the mid-low key level yet, right? We're talking here, and you remember this level because we were aiming at this level when we were having a bearish campaign, right? The 2612. Now again, it's going to act it's going to act as an important role here as a secondary target in the S&P 500. But what I'm trying to say is that in this case, I think the Dow Jones is leading the S&P 500, right? The Dow Jones, let's take a look again. The Dow Jones had broken that mid-low key level with a weekly close, right? The S&P 500 is very close to that same mid-low key level. It's about to reach it. It's closing in pretty quickly, pretty rapidly, but it hadn't broken that level yet. So I have a strong feeling, you know, that it will follow the Dow Jones and will break the 2612 here and continue on the upside. And here we're talking about well, the high section here, the highest section with the main key level, which should be you know, the final destination, if you will, should be the main price target is 27.95. So we got a pretty healthy move still ahead of us. Let me go back again and one last time to the Dow Jones before we wrap this up. So now the price broke with that weekly confirmation, the mid-low key level of 23.957. I'm going back to re-increasing my position, and I'm going to try to keep increasing my position all the way through 25.855, even though I do suspect that price will break that key level. Even that resistance, it will break that and will continue upwards till it hits the previous major highs, right? Around the level of 26,800 pretty much. That's where the previous two highs roughly are placed, right? So I think price, just because of the nature of that low we just had here, that remarkable low, I think price will try to take the previous highs, that just as it did here on the downside when it took the previous low, right? So I think we have, potentially speaking, quite a bit of a move ahead of us, right? Anyway, I should also mention the fact that I had adjusted the stop loss level actually just yesterday for the first time. It was at 21,550, right below, just a tad below that spike here, and I have adjusted it by a full 1,000 points to 22,550. As you can see, still quite a distance from price action. I like to give my position a lot of room to breathe, right? Market is, you know, likes to dance back and forth many times. Sometimes it sends a vicious spike, which is why the reason I like to keep my my stop loss orders in a bit of a distance from price action. Anyway, guys, that's the situation. We're back on the upside. We're back having a full force bullish conviction on Wall Street in general, more specifically on the Dow Jones and the S&P 500. And I plan to keep following up on this one probably in a month from now, and we'll see where the market had went, right? We'll see if I was on top of this one, just as I did on the downside on the previous campaign. So yeah, I think that's about that for today, guys. I wish you a great trading day. Don't forget to subscribe to our channel if you haven't already, and follow our leads, follow our sessions. We're going to be here in the next one. Take care.